Assalamu alaikum friends, welcome to question number 20 of SBR revision kit, Bagshot, and it's a question from your March 2020 paper, Bagshot. This is your question number 2 of section A, and in this question you'll be having ethics question and the 2 professional marks. Okay, so relating to questions on ethics, I have covered all the questions, okay, except this, and I think 2 more is left. And after that we'll be moving towards section B questions. Okay, so let us read the background. Okay, Bagshot has a controlling interest in a number of entities. Group results has been disappointing in recent years, and directors has been discussing various strategies to improve this group performance, and now they have given you some uh, information relating to the personnel. Mr. Shaw is the head accountant, Mrs. Dow is the chief executive, Mike Starr is the nephew of Mr. Shaw, who is the head accountant, and Mrs. Shaw is the wife of Mr. Shaw. Okay, and then we have the group restructure, Mrs. Shaw, who is the wife of Mr. Shaw, and then the requirements. So first let us read the requirements before we go to the case study in detail. Okay, requirement A, discuss the appropriate accounting treatment of the restructuring cost in the financial statements of Bagshot. Okay, so for restructuring cost, you have to know which standard to use. Okay, as I told you before that in SBR they will not specifically tell you this standard, this standard, this standard. Looking at the word, you should know which standard you have to apply. Okay, so that is your IAS 37. Second, discuss what is meant by good stewardship of a company. There are 2 requirements here for 4 marks. One is what is the meaning of good stewardship, and the other one is whether restructure and the recognition of a restructuring provision are the good examples of are examples of good stewardship or not. When you recognize a restructuring provision, is it a good example of good stewardship? So these are 2 things. Okay, and this topic is a little bit what do I say, students are not very happy with it. The reason is because you have been learning all standards, right? All the standards, but what about the stewardships and all? Where do you know from, where do you study this stewardship and all, the definition of it? These things usually don't come for the exam, and when it comes, students are shocked. So the meaning of good stewardship, if you want to know, you will get it in your conceptual framework. Okay, that is your lecture number 1. And third one is discuss briefly whether Mrs. Shaw, who is the wife of Mr. Shaw, the head accountant, accusation, and now she is acquiring some equity shares in the company where her husband is the head accountant. She wants to acquire some equity shares. Okay, and whether this should be disclosed as a related party transaction or not for 3 marks. So this is relating to related party transactions. Okay, earlier there's a change in syllabus. Earlier related party transaction was only on ethics. Now it can be asked as other reporting issues like this one, right? Apart from ethics also. Okay, so part B, identify and discuss ethical issues. Identifying is one thing, discussing is another thing. Identification is only one word or few words, but when you discuss, you have to write it in sentences, maybe 2 3 lines or 5 6 lines. Okay, after you identify that issue only you have to discuss. Okay, ethical issues which arises from the scenario which Mr. Shaw needs to consider, and what actions, so what actions they should take as a consequences, actions to mitigate these ethical issues. Okay, one is ethical issue, the other one is actions to mitigate those ethical issues. Both you have to answer, and your professional marks you will get for part B only. Okay, professional marks in section question number 2 comes only for ethical question, not for section A. Okay, and this question is the question which has the lowest mark, 20 marks only, compared to the other 3 questions. So make sure that you try to get the maximum mark in this section. It's easy to get highest number of marks in your question number 2. Okay, so now we'll start with this. So following personnel we read, now the group restructure. They are planning to restructure. Why? Because as you can see in the background, they have been facing some disappointing results in the few years, right? So now they want to restructure it to improve the performance. Mr. Shaw is an ACCA member and he's a head accountant. He's not a member of the board of directors. Not a member of the board of directors. This is very important, especially when it comes for your ethical and as well as your related party. You have to know whether he's a member of a board of director, okay, or not. Mrs. Dow, okay, Mr. Dowes or Dows or whatever it is, the chief executive, she is the chief executive, is also an ACCA member. During 2005, Mrs. Dow, who is the chief executive, planned to reveal to Mr. Shaw, okay, about a restructure for the group, which had been discussed at the board meeting. Okay, what does this restructuring plan includes? Some general analysis of the expected cost. Okay, if restructures take place, what are the costs? This cost includes legal fees, relocation of staff, and redundancy costs for employees. Three types of cost. Okay, and one such employee to be made redundant is who? Mikester. Who is Mikester? He is the nephew of Mr. Shaw. He is to be made redundant. Now, Mrs. Dow is insistent that Mr. Shaw should include a restructuring provision. So now she is telling, the chief executive is telling the head accountant, look, you have to include a restructuring provision for all of the expenditure. That means the legal fees, the relocation cost of staff, and the redundancy cost. All these three types of costs, you have to include a restructuring provision in the financial statements. Okay. She also says that even if restructuring did not take place exactly as detailed, similar levels of expenditure will be likely to be incurred on alternative strategies. That means apart from restructuring, they have some alternative strategies also. And there also they are going to incur similar expenses. She is arguing, telling why they should recognize a restructuring provision. So, therefore, in this case, it is prudent to include a restructuring provision for all the expenditure. Is it so? We'll see later. None of the staff other than Mr. Shaw has been notified. None of the staff. Only Mr. Shaw has been notified about this restructuring plan. Okay? And she expects that Mr. Shaw will give her a final decision and public announcement has to be made before the authorization of the financial statements. Okay, now coming to Mrs. Shaw, who is the wife of Mr. Shaw, the head accountant. She is not an employee. The wife is not the employee of the company. Okay, and she does not know about the proposed restructure also. But she only acquires 5% of equity shares in the company. 5%. And Mr. Shaw is considering whether she has to inform his wife about the proposed restructure or not. Because if she informs his wife, what happens is that now she can make a better informed decision whether to sell the share, the 5% shares or not in the company, because they're going to restructure, right? And Mr. Shaw is also concerned that in the short term, okay, this will be harmful for the property. For the profitability when you include restructuring cost. Okay, and also he's uncertain that how the market will react to this restructuring. But in the long term, okay, it is anticipated that this restructuring will increase the shareholder value. So now coming to this one. First, you have to explain the accounting treatment of restructuring costs. You need the knowledge of, this is a very technical area. You need lots of knowledge from your provision, IS 37. Okay, IS 37 is a standard which is very frequently asked. It could be asked in any question number 1, 2, 3, 4. Okay, that's why you have to be prepared for this IS 37. Under IS 37, lots of things could be asked. It could be maybe a contingent liability or a contingent asset or a provision. There are many types of provision. Okay, so your topic should be restructuring. Okay, keep a subheading restructuring. Now you need to state the criteria that must be satisfied for a provision to be recognized. Before you say that a restructuring provision should be recognized or not, first say whether provision has to be recognized or not. If a provision has to be recognized, then only we will talk about restructuring part. You understanding? So first has provision. Then only we'll come to restructure, because restructuring provision will recognize or not is based on this first. Then only we'll come to restructuring part. That's why we have to list the criteria. Okay? And there are 3 criteria. Where do you get these 3 criteria from? From your IS 37. Okay? If you forgot, in any case, go back to my video on IS 37. You will get it under SBR lecture. IS 37, get it from there. and come back to the provision part and then we'll go to the restructuring part. Okay. So a provision for restructuring should only be recognized if the following criteria are met. Okay. What is the three criteria? You have to be able to make a reliable estimate of the amount of the obligation. What is the amount? Estimate has to be made a reliable. Second, probable outflow of resources. There should be something which is going out, outflow of resources. For example, cash is going, right, to settle that obligation. And number three, this present obligation is there because of some past event. If these three conditions are there, okay, recognize. Okay, IS 37 states that it would be extremely rare that no reliable estimate can be made. Most of the time, you can make some estimate, right? It is very rare that you cannot make a reliable estimate. Very rarely it happens. Like how they have made some estimates, right? Legal cost, some cost and all they told. So a best estimate of the expenditure required to settle the present obligation should be provided as a 31st December 2005 should all the criteria be met. Okay. If all the criteria are met, then you have to make a best estimate of the expenses that are required to settle this present obligation at this date. Okay. But when it comes to restructuring provision, remember, restructuring provision, all the direct expenditure that arises from the restructuring you can include, not any ongoing activities. For example, activities which will happen ongoing. Whether you do restructuring or not, this cost will be there. Those you cannot take as a provision. You cannot recognize provision for those. Only those which are directly because of restructuring. Those costs you can take. Okay. So out of the three costs you have been given. Okay, we'll come back. If you see here, highlight. One is legal fee, one is relocation of cost, and the other one is redundancy. So redundancy, number of employees. You are making employees redundant because of this restructuring. So it's a direct cost. Legal fees, direct cost. But what about relocation of staff? See, relocation of staff, maybe sometimes you might be opening some new branch in another location. So you want to relocate your existing staff to that place. So this relocation could happen not only because of restructuring, it could happen because of any reason. So relocation cost for staff is an ongoing activity. For that you cannot provide restructuring provision. Okay, that's what it said here, that relocation cost you cannot include it as a restructuring provision, even though it is directly, you can say it is directly related to the restructuring only because you are relocated, but this cost is classified as an ongoing activity. That means whether restructuring is there or not, it's an ongoing activity. You will somewhere, okay, somewhere down the line you will relocate your staff. So in this case, it is not clear that this restructuring payments are probable or not. We don't know yet. Okay, it is not clear. Why? Because they have some alternative strategies also, right? The chief executive, Mrs. Dowes, told that there are some alternative strategies if restructuring does not take place. But what are these alternative strategies? They didn't mention. That's why further clarification is required for this. Only then you can decide whether restructuring payments are probable or not. Okay. Now, whenever you talk about IS 37, okay, there are two types of obligation. One is known as legal, the other one is known as constructive. What is the meaning of constructive and legal? Legal is something maybe because of some contract you are having in the past. Because of that, you have some obligation. Okay. But constructive obligation means what? The definition is given under the tutorial note. Okay. Constructive obligation means from your past behavior. Okay. There's some expectation that now or in the future also you'll be doing the same thing because in the past it has been done. So that is known as constructive obligation. Okay. So in this case, we cannot talk about legal obligation or anything like that, but constructive obligation. Okay. Constructive obligation for restructuring arises when? Always you have to focus your attention towards restructuring. Provision is a wide topic. Under provision, you can apply provision for many things. But now we are currently talking about restructuring. So make sure that your answer is only towards restructuring. So constructive obligation for restructuring will only arise when two things are there. Number one, detailed formal plan exists. Second, you are informing those who are affected by this restructuring. For example, employees who are going to be sacked off, you are informing them. If these two things are there, you can say that there's an obligation, constructive obligation. Okay. Why constructive obligation? Because you have already have a detailed formal plan. You have already informed those who are going to get affected by this restructuring. So what does it mean? It means that in the future you will be doing restructuring. So it creates some expectation that these things are there in place. That means restructuring is going to take place. Okay. It's known as constructive obligation. Remember these words. Okay. These are very important keywords. You need to write this in your answer, especially when it comes to provision and all. Okay. And this is for restructuring. But in this case, you have to see whether there is any detailed formal plan, whether they have informed those who are going to get affected. So in this case, there is a plan. Plan is in place. But what about the management? They are not committed to this because there are some alternative strategies. See, whenever you have some alternative strategies, you think for yourself, you are not very willing to commit to a particular thing because you know, okay, if this thing does not work, I have an alternative to go back. If you are always stick to one plan only, then you'll be likely to be more committed. But in this case, they don't seem committed. Okay. And also the plan, that therefore it's very unlikely that this plan will be very detailed because they told detailed formal plan. It's not just some plan, okay, I'm going to restructure, there's a plan, I'm just going to restructure. No, it should be very detailed. When, how, what is the cost, who are going to be sacked, who are going to be relocated to where, everything has to be mentioned in that plan. Therefore, because of this, because they don't look committed, right, it's very unlikely that plan also will be detailed and specific enough for this criteria to be set. That means this criteria you can say is not satisfied, the detailed formal plan. Let us go to the second one. Okay. For example, the specific expenditure to be incurred. Okay, now they are giving examples. What is the meaning of detailed? Specific expenditure that you are going to incur. Is it explained? And when is the date of the implementation? When are you going to restructure? When is that date and the time frame? For how long? Okay, and this should not be too long. Okay, you cannot say after 5 years we are going to restructure. We are going to implement this after 5 years and this other. No, it should not be too long. Okay, this should have been identified in the plan. But because of the alternative strategy, this does not appear to be the case in this one, right? And what about the second thing? What about the informing the one who is affected? Only Mr. Shaw is the only member of the staff who has been informed, who has been notified. They didn't do any public announcement. So because they didn't do any public announcement, no detailed plan, therefore no obligation is there at this date. Mention the date also. For provision, date is very important. At this date, there is no obligation. Therefore, no provision can be recognized. Conclude it like this. Immediately don't go and start saying no provision can be recognized. You need to back up like this with facts from the standard. Because it's for 6 marks. It's not for 1 mark that you will just say no provision can be recognized for this. We know that provision cannot be recognized for this. But why? Because of this reasons. No detailed plan. No one is informed other than Mr. Shaw. But Mr. Shaw is not the one who is going to get affected, by the way. It is his nephew who is going to get affected and also other staff. Right? So he has to inform, but they were not informed. Okay. Now we are coming to the second thing. Okay, before that, this one. It's the third paragraph. Okay, give your answers in different paragraphs. So Mr. Dove has identified that a final decision on the restructuring and communication is likely to take place before the financial statements are authorized, right? So this looks like that this is a material event, correct? But it is arising after the reporting date. That means it's a non-adjusting event. You have to mention this also. Okay, it's a non-adjusting event. So what should the company do? You can disclose the nature. You don't recognize provision, but you can disclose the nature of this restructuring and also what is the estimate of its financial effect. But recognition of restructuring provision is still prohibited. You cannot still recognize the restructuring provision. Yes, you can disclose the nature of that provision, the restructuring, and the estimate of its financial effect. What could be the effect on the financial statement if restructuring takes place? That estimate you can disclose, yes, but do not recognize restructuring provision. Okay, now we are coming to the second one, stewardship. So stewardship also, okay, it's for 4 marks. 2 things for defining what is it, and the other 2 marks for explaining that if you recognize this restructuring provision, will it be a good stewardship or not? Okay, so for stewardship, if you want to study what is it, go to conceptual framework. Is there, not the whole conceptual framework. In the beginning of the conceptual framework you will get it. Okay, now first define stewardship. If you see the answer, okay, so what is stewardship? If I ask you this question, what will you tell me? It is an ethical principle which embodies the responsible planning and management of resources. You are managing the resources that you have been trusted with. For example, if you're the manager of the company, you have a responsibility. You are accountable to the shareholder. You are looking after their resources that you have been entrusted with. You are making a proper use of the resources. You are carrying out your responsibility properly. You are being ethical. That is the meaning of stewardship. Okay. So the directors of the company, they perform a stewardship role in that they are appointed by the shareholders. How are they performing? They are appointed by the shareholders to manage the company on their behalf. Shareholders are not able to manage the company. That's why they are hiring them, the managers, to appoint. That is the meaning of stewardship role. In this case, the directors, okay, being the directors, they have to assume the responsibilities of the shareholders. What is their responsibility? Remember, whenever you're talking about stewardship, you have to talk about the responsibilities also. What are their responsibilities? To protect the entity's resources from any unfavorable effect of the economic factor. What could be the unfavorable factor, such as price might go up, your resources might become very expensive. If any technological changes, your product might be obsolete. Okay, so in order to protect this, it's your responsibility. Whose? Directors. And also you have to make sure that the company complies with all laws, regulations, and contractual obligations. It is the responsibilities of the manager, the director. That is the meaning of stewardship role. Now link this, you can link information from your background information also. In the background, if you see 2-3 lines of information that they give you, you make use of those information in your answer. For example, here if you see, group results was disappointing in recent years. So this you can use in your answer here. That group results, so you see, group results has been disappointing in recent years. So it's your responsibility to make sure that it's not disappointing any longer. Okay, but there is no specific causes. No specific causes has been identified why it is so. So in this case, you can argue that yes, restructuring is very much needed because it is acting in a good faith and it is reflecting good principle of stewardship also. It is also anticipated that long-term shareholder value will be enhanced from this proposal. From where are you saying this? That long-term shareholder value will be enhanced. That is given somewhere here, if you can recall. You see, long-term shareholder value will be enhanced. They told if this restructuring take place. So from here, put it in your answer. Okay. Now, for this you will get 2 marks. Why 2 marks? You have defined. You have told also if restructuring takes place, how it will be a good stewardship. Now, another factor you have to discuss because it's total 4 marks. So the second factor of good stewardship is what? That any information that they receive, who, whether investor, whether the existing or the potential lenders, are reliable and accurate information, because they have to make decision based on that information. So the information that is presented to them, investors or lenders, it has to be reliable, A, B, accurate information. Because looking at this information only, they will know how efficiently or effectively the entity's management and the governing board are carrying out their responsibilities, right? So that means it's very important that financial statements should be transparent, objective, and fully comply with IFRS standard. Now, after this point, again start linking this with restructuring part. That's not enough. You have just defined good stewardship. So in this case, Mr. Dew is Mrs. Dells wants to include a restructuring provision, right? Even though no obligation exists, we saw in part A, no obligation exists, still she wants to include this restructuring provision. Is it so? Will it enhance good stewardship? You can say, okay, you are being prudent. Okay, prudent is a guiding principle, it guides you, especially when you are dealing with issues of uncertainty. When you are uncertain, you have to be very prudent. But excessive prudence also cannot be justified. This is excessively prudence. Why? Because she is telling include all the cost as restructuring provision. It is excessively prudence. It is not justified. You cannot justify it because no obligation exists. And also, she is a qualified member of ACCA. Please make sure that when something they say that she's a member of this board or this professional qualification, make sure that you write this in your answer. Okay. So, she being the qualified member of ACCA, okay, it should be apparent to her. She should know that no provision should be recognized. And if she includes also one, it will be misleading to the stakeholders. Hence, it's not a good stewardship if they include it because it will mislead the stakeholders of Bagshot. Okay, now we are coming to the related party, whether they are related party or not. Third one. Okay, and then we have ethics. So first of all, you have to see whether Mrs. Shaw, who is the wife of the Mr. Shaw, the head accountant, if she acquires any equity shares, whether it will be a related party or not, related party transaction or not. So Mrs. Shaw's acquisition of equity shares would be deemed. It might seem like it's a related party transaction. Okay, when it gives her control or significant influence. That means more than 50% to have control or more than 20% to have significant influence. But she only acquires 5%, right? 5% does not give her control also, 5% does not give her significant influence also. So that you have to mention. Okay. So this is from your IS 24, you are saying that a person is a related party of an entity when they have a control also or they have a significant influence. But in this case, she only has 5% interest. This is very below the threshold. Okay. So because they are having less than 20% also, that means they are not going to have any significant influence. Okay. But what about the directors? Bagshot's directors would be related parties of Bagshot. The directors could be the related parties for the company. Okay. And Mrs. Shaw is also unaware. She's unaware of this restructure. That means she does not have a board position. Okay. She does not have a board position. Mrs. Shaw is deemed to be a close family member also of Mr. Shaw. Okay. In terms of the 5% shareholding, she's not a related party. But what about her relationship with her husband? It looks like she's a close family member, right? Because in the close family member, children, spouses, and domestic partners comes. And she's a wife, she's a spouse. So in that sense, she's a related party. And so it will be related party of the company also. But if it was concluded that Mr. Shaw is a member of key management personnel, if Mr. Shaw is a member of a key management personnel, then his wife is a related party to the company. But we don't know what is the position of Mr. Shaw. We already know he's a head accountant, right? And head accountant, it does not look like that he is a key management personnel. If he was some director or something, then yes, we can say he's a key management personnel. And there is no evidence also whether he has any authority or responsibility for planning, directing, and controlling. Nor does he appear to be the director of the entity because they clearly told he is not a member of the board. Right? The first line only starts like that. He's a member of ACC, he's not a member of the board. Now you have to give a conclusion. Don't forget that, whether it's a related party or not. So based on the above, you can conclude that because she acquired 5%, therefore she's not a related party transaction based on this fact. Because this is very clear cut. If you go by the other thing that she's a wife, that's why no. Because that's hard. Even though she's a wife, spouse, but it matters what is the position of Mr. Shaw, whether he's a key management personnel or not. That is not very clear cut, but this is a very clear cut, so this you can use as a conclusion. Now we are coming to ethics. Okay, ethics, you have to use the whole case study. There is no specific thing that only this paragraph only is for ethics, others I can exclude. No. Okay, so when you are writing ethics, you always have to write which principles in the code of ethics has been breached. What are the 5 codes of ethics? Confidentiality, objectivity, integrity, professional competence, and UK professional behavior. Out of this 5, which has been breached in this case? Okay, that you have to give and actions how to overcome them. If it's a long answer, right? For 5 marks, this is a lengthy answer. So in this case, if you see Mr. Shaw, who is the head accountant, is facing number of ethical dilemmas. One by one, you have to list it out. What are the ethical dilemmas he's facing? Okay. First of all, the chief executive, Mrs. Dawes, she insisted that restructuring provision should be included for all the cost to Mr. Shaw. And this includes what? That it is an intimidation threat to objectivity. You have to write which type of threat also it is. Intimidation means you are pressurizing someone to do something. So she is pressurizing Mr. Shaw, that include restructuring provision for all. Intimidation threat to objectivity. Which code of ethics is breached in this case? Don't write all the list of all the 5. It is objectivity. Because you're not objective. You're not accurate in this thing. Objectivity means when you are influenced by someone else. Okay, it is not your independent decision. So in this case, threat to objectivity. But even though her motivation, that why you have to include the provision early, is unclear. It's very unclear. When something is very clear, you can make a note of it, that her motivation is to conceal, her motivation is this or that, and sometimes they give you the motivation also. But in this case, motivation is unclear. Okay. Next thing that you can talk about is ACCA part, that she's a qualified member of ACCA. Okay. So being a qualified member of ACCA, at least he should know that this treatment is inconsistent with IFRS. So this thing also you can write. Even Mr. Shaw must adhere to the ACCA's code of ethics also. He must comply with this. And then prepare the financial statements, which are objective and fully comply with IFRS standard. But if you include this provision, it will not comply with IAS 37, neither the conceptual framework. So in this case, what should he do? You are giving an action also. You should say he should not comply with the request of Mrs. Dawes and politely remind her of her professional responsibilities. Politely remind someone, because she's an ACCA member of, she's a member of ACCA. So she has some professional responsibilities because of that. You have to request. Okay, because if you are not complying with accounting standards, it's a breach of range of ethical principles. You are breaching ethical principles also. For example, what is it? Number 1, objectivity, we know. Another is professional behavior. You are discrediting your profession and professional competence. Being an ACCA member, you should know the rules and all. You should have the skills, the knowledge, right? You should be competent enough. So these 3 ethical principles are being breached. But if we assume that Mrs. Doe is aware of the error, that means she knows that this error, her integrity is also questionable. If she is aware, the more points you can give from various angles you can think, the more points also you will get. It's as simple as that. Okay. Now we have to talk about insider trading. Why insider trading? Because Mr. Shaw has relatives in the company, the wife and the nephew. That's why you have to talk about insider trading. Okay. This is not something which is always asked in SBR, but it's an issue in real life. We all know that, right? When we have information to something which others don't have access to, and we are taking an unfair advantage using that information, that is known as insider trading, which is illegal. Okay. Not accepted. So let's see in this case. So he can, second, this is second ethical issue. First we talked about that this thing, what is it, restructuring provision, recognition of restructuring provision. that it will be questionable and all those things. Now we are moving to the second thing, that is about insider trading. So Mr. Shaw could be accused of this also, whether he has to inform his wife or the nephew relating to the restructuring, right? So all these things are explanations of what is insider trading, that you are using information which is not public to others, right? So in this case, it is clear that such behavior will not be ethical. It's not ethical because then the wife can take advantage position over the other shareholders. Okay? And insider tradings means you have information which others don't have. And because of this, others might react differently. But if they have those information that you have, they might act differently. Okay? That's the reason it is not ethical. So if such activities are seen to take place, they are fraudulent, they are fraud. And they come in under money laundering regulations. It's a breach of local money laundering regulations. It's very serious offense, insider trading. Okay? You can even go to jail, you can be penalized, you can go to jail for that. Okay? So what are the other actions, recommended actions that you can take? It's very simple. Just do not disclose confidential information. Okay? Because Mr. Shaw is the head accountant, he knows about the restructuring. Don't disclose to the wife and the nephew. Okay? But writing one line is not enough in ACCA. You need to explain it and write like this. Okay? So starting with Mr. Shaw, that he'll be having information, the confidential information. Okay? So according to the ACCA, okay, the key ethical principle in this case is related to confidentiality. Okay? That means information should not be disclosed to others unless you have any legal or professional right or duty to disclose. You can say you should not write that information can never be disclosed to others. No, that's not the rule. Information and if you want to know about it, go to ethics for SBR. That is, I think, my lecture number 2. Lecture 2 is ethics. Yes, you have to go back there and see. Information can be disclosed in certain condition. If you have some legal, the law says you so, or your professional, your ACCA says you that you have a right to disclose due to some reasons. One example is money laundering. If you expect some money laundering to take place, you can disclose to the authorized party. Okay, that's why you always have to state that it should not be disclosed unless if these things are there. Exceptions are always there. Okay, and also the professional accountant, they should not use this information whatever they get for their own personal benefit. That is also there. One thing, you don't give information to anyone. Second, you also don't use it for your own personal benefit. Okay, so in this case, he has a self-interest threat, Mr. Shaw. Why self-interest? One, because of the wife's ownership of the share, that 5%. The other one, nephew is going to face redundancy. So because of these two reasons, he's going to have some self-interest threat. He'll be having a self-interest to disclose information to the wife and the nephew. Okay, and the wife can use this information to sell that 5% interest. And also Mr. Shaw might feel pressurized to inform his nephew of the redundancy. And this allows nephew to get unfair advantage over other employees. Okay. So at the end, just write in one sentence, she must not disclose confidential information to his wife or nephew. That's it. This is the action that you are telling to mitigate that risk. Now, that's it, right? Now let us go to the marking scheme. So if you see the marking scheme, which is for 6 marks, part A, when you're discussing the IAS 37 criteria about restructuring itself is 3 marks. Application that to the scenario is only 2 marks, and only for identifying that it's a non-adjusting event is 1 mark. So if you don't identify that it's a non-adjusting event, you will lose that 1 mark. Okay. Second, relating to stewardship. What is meant by good stewardship? Examples of good stewardship. You're giving examples also by referring to restructuring. Third, related party. For related party, first define whether control or significant influence is there. For 2 marks is there. Then recognition that she's a close family member is 1 mark. That's how you get the 3 mark. Later, this point you can explain in 10 lines, 5 lines, 6 is up to you. But at least you recognize that she's a close family member. For that, there itself you will get 1 mark. If you say she's a close family member because she's a spouse, according to IAS 24. Now, ethics. Intimidation threat. It's an intimidation from whom? This chief executive, 1 mark. Insider trading. For insider trading, 2 marks. For confidentiality, 2 marks. Remember, you will not get points for how many lines you are writing. Once you have identified, there itself you will get the point if you are able to explain it properly. Like the three ethical issues, one is intimidation threat, the other one is insider trading, because you have the information, right? And the other one is confidentiality. That means you are giving information to the wife and the nephew. Okay, and the 2 professional marks. And now let us go by the examiner's comment. So if you go by the examiner's comment, okay, most of the candidates, they overlook the knowledge of explaining what constitutes a related party. Most of the candidates, they didn't understand that knowledge part is very important in this case. To know that whether she's a related party, you just cannot see by looking at it, okay, she's a wife having 5%, that's why she's a related party. No, knowledge part is missing there. Because other thing is, most of the answer, they did not consider the relevance of the proportion of the shares held. That means that it's only 5%. Not, it's not giving significant influence, it's not giving control also. Most of the candidates ignored this part. They straight away jumped into the position saying that he's a key manager, he's a position of key management, Mr. Shaw. Okay, even though he's not being a director, it's very hard, you just cannot jump like this. And therefore they give wrong conclusion as a result that it's a related party. Coming to part B, ethics. This is generally good. So what I have found out from my experience and from the examiner's comment, that candidates do well in ethics, ethical question. Okay, clearly identification of ethical issue and suggestion also to how to resolve them. So this means most of the candidate are good in this area, so you have nothing to worry about this area. Okay, because simply action is maintain confidentiality. Okay, sometimes ethical question could be 10 marks also. If you see the previous question to this one, this is what question number 20, question number 19, calibra. That is, I think, for 12 marks was ethical question, but this one is, I think, just 5 marks with the 2 professional marks. So you can see a different marks on ethical question only, how much you have to write. Check their length, check the points that you have to mention, and how detailed you are writing, looking at the number of marks, because it's not fixed. Ethical question can be asked for any marks. It's not fixed that it will only be asked for 5 marks or it will only be asked for 10 marks. It's nothing like that. It could be asked for any number of marks, sometimes more, sometimes less. So you have to be prepared for both. But the points are more or less same. Maybe in 10 marks it's more detailed. Maybe more issues are there. Maybe for this only 3 issues, like what you have seen: insider trading, then intimidation threat, and confidentiality. So that's it, and see you in the next question. Till then, take care.